Good morning, everybody. Good morning. Happy Monday. We made it. Jay Patel, welcome to the room. Nice to have you in here. Tam, it's good to see you back. Good morning, Mike. Good morning. How's everyone doing? Good weekend, I hope. Go out, do something that wasn't day traded relating. Stretch your legs, take a walk on the beach, climb a mountain. Something fun, I hope. Guys, my name is Mark Novak, for those of you that are brand new, and this is the Education Room. We are going to take the first hour to discuss rules. We're going to talk about advantages. We're going to begin to recognize patterns, guys. That's the goal for the first hour. And then, as always, this classroom is dedicated to giving you feedback on each and everything that you do in the market. Every time you take a trade, every time you read a chart, you have the opportunity to post that chart into the room, to ask as many questions as you like, and get the feedback that you need to be comfortable with the software. Um, we're going to do that. We do this every day, guys. I'm a big fan of repetition. I like to say the same thing over and over and over again. But the reality is that when you guys ask me a specific question, I learn how to say the same thing a different way, and it reaches a bigger audience. So don't be shy with your questions. Please make sure that you come through and ask everything that you want. I'm also a creature of habit, and the first habit that I've put in place for myself each and every morning is I open up forexfactory.com/calendar, and I'm looking for news, and I'm making sure that I'm not trading or in a trade directly into a news release. Today at 10 a.m. we have final wholesale inventories. We also have FOMC member Barr speaking. Um, Forex Factory is telling me that these are low impact. It's a yellow box. They're not expecting a lot of market movement coming from these news releases. I'm not really concerned about what the release is. I don't pay attention to the news when I trade. I pay attention to patterns. That's what I trade. But news can make the market react so aggressively that those patterns are difficult to catch. It's difficult to keep up with. So for me, I personally don't trade into news. Whenever I see news, I write a note on a piece of paper and I wait patiently for that news to clear, for the market to settle down, and then I begin the process of looking for my rules to be met once again. So every morning, that's what I'm doing. I like to take you guys from the Forex Factory page to the education page for Nexgen. If you're brand new with me, and I know that I have a few of you in here, Tam, I know that you pulled it off the other day. Jay Patel, go to your search bar on your computer, and I want you to type in tech or TechSmith capture, and open up that picture taking tool. It's important to me that you guys are comfortable with being able to take these pictures. So I like to go through a little tutorial. I like to show you how to do it, and it's all right here in the software user guide. Guys, this is your NinjaTrader how-to. So as you get comfortable with the charting platform and running the indicators on the platform, this is kind of your how to open, how to close, how to build charts, how to scale charts, how to connect to your live account, setting up stops and targets, resetting your simulator. There's even some great information on cryptocurrencies in there if that's something that you're interested in. So guys, this is just really the how-to. If you have a question about NinjaTrader, if you're struggling with something, please raise your hand in classroom. We'll get you taken care of. But I'll also point you in the direction of where to find those answers a little later. Hey, good morning, Jose. Um, But this part of the tutorial section of the user guide, sorry, excuse me, is one of the most important ones, guys, and it's how to use that screen capture program. This TechSmith program was downloaded on your computer when you got your demo, when you downloaded the software. And it's pretty easy. If you just click this giant red capture button, it's a click and drag tool. You're going to be able to take pictures of your charts by left clicking on your mouse and dragging down to the right. And when you release, it's going to give you this option, capture an image. Click on that camera and it's going to open up. And guys, this is how we have conversations. I posted a picture in the room earlier, how to annotate a chart, just to help you. How often do you? I do it every morning, Ty man. Every morning for NinjaTrader 8, that's part of what I do in the morning. Let me finish with this and we'll go through it. But yeah, each and every day I'm giving myself a fresh start. As when you have your image preview up, we're going to use different tools to talk to one another. There's arrows available, so you can point out things that you're looking at, places where you have questions. There's also shapes. Maybe you're curious about what you're seeing. You can bring attention to it. But the most important tool that you're going to use when you annotate your charts is the call out button. And if I click on that call out button, it is going to be a left click and a drag down to the right, and it's going to give me this text box. And I'm going to write my rules on the chart. And I'm going to write what I see and why I think I'm seeing it and what I'm doing. And if I entered a trade, I'm going to talk about why I entered that trade. What were the rules met that made me take that trade? This becomes a tool for you and I to have a conversation. And if you just click copy, you can right-click that picture directly into the chat box. And when you do, once we get to the second hour after we're done talking about rules, what I'm going to do is I'm going to click on that picture that you posted in the room and bring it up, and you and I are going to have a conversation. I'm going to say something clever like, Jose, I noticed that you were looking at areas inside of favorable large triggers, or Safia, I noticed that you had odds favorable momentum. K-pop, you're trading into a termination condition. And what we'll do is we'll have this great conversation each and every day. I'm going to give you feedback on the way that you're reading your charts. I'm going to tell you how I read your charts. If I notice something that's bringing you success, we're going to celebrate it. And I'm going to use that to reinforce those good rules. And if we're finding something that may be disadvantageous, we're going to discuss it as well and help you get to where you want to be. So you can copy it in here, you can post it in, and then what you can also do is upload it. This blue button is your upload button, and it's going to give you a link. And you'll notice that a lot of people, when they post in the room, there's a screencast, app.screencast, letters and numbers. If you copy that link, it's going to give you that same picture via link in the chat room where we can have a conversation about it. But the most important thing that I'm going to do with these pictures that I take is I'm going to use my tracking sheet. I'm going to use my spreadsheet, and every time I copy a link on that spreadsheet, I can go, if I took a trade, I can post it into my spreadsheet, and I can come back and study those pictures every morning. And that's going to be part of the process that gets you where you want to be. So if you have a question about using TechSmith Capture, let me know. If you haven't used it yet, practice, give it a go. Practice annotating your charts, practice writing down what you see. Post a picture in the room, just call it test if you want, so that we know that you're comfortable. And again, there's that link to it to help you out. And then Tyman, here's those stability instructions. So deleting, charts in workspace, I think I misunderstood the question, so I want to go back to it. I don't delete my charts in workspace every morning. What I do is I go through this process every morning, and I delete my cache, and I delete my tick, and I'll come through on NinjaTrader 8, and I'll get rid of my temporary folder. And then when I'm done getting rid of my temporary folder, I'll go back and I'll get rid of my recovery folder. I'll do this every morning for stability. I'll do it for 7 as well as 8. As far as deleting my actual charts in my workspaces, maybe once a week, every other week, I'll start fresh. But if you're taking care of your data, if you're going through and you're cleaning out your data every day, and another thing is repairing your data. Let me see if I can find that. NinjaTrader data repair. This is going to take good care of you, because if you're taking care of all those ticks and all those clicks, it's going to be okay. You don't necessarily need to create a new workspace unless something appears to be corrupt. So sorry, I misspoke when I came at you the first time. Hopefully that clears it up a little bit. You're very welcome. And then guys, the user guide is going to get you to your NinjaTrader how-to. The charts don't have to be closed, Gary, but you have to disconnect from your live account. You can't repair data connected to data. They conflict. Cool. Guys, I'm going to click this button to start the education. This is the tutorial section. This is where everything that I talk about comes from. And I mean everything that I talk about. You're going to be able to find it, guys. I don't keep any secrets from you. I don't hold back. I don't do anything on the sly. I'm not going to give you a little bit of information and then charge you for more. So everything comes from this tutorial section, guys, and we're going to use it. And we're going to talk about a trade in the first hour. We're going to talk about what we call a high probability trend trade. And your high probability trend trade is going to be a trade where every indicator on every chart agrees for the trade. You're going to have the strongest triggers. You're going to have nothing in the way. And you're going to have the absolute best entries, guys. And this high probability trend trade, the way we teach it, is a trade that typically wins 70 to 80% of the time. It's a trade that creates advantages. And this high probability trend trade, while it's going to give you a path for success as a brand new user, it's going to give you a trade that does win more than it loses. It creates confidence through the memory of success. What it's really going to do is it's going to teach you to become a chart reader. And guys, this is the most important skill that you can have. When you are a chart reader, when you open up your workspaces, you look at these indicators, you are going to confidently understand where the market is likely to continue, and ultimately you'll be using those continuation points for entries for these highest probability trend trades and ultimately other trades that you may add to your plan. You're going to understand where the market is likely to go, and this is going to allow you to make intelligent decisions on targets. S. Fitz, I see that you enjoyed that you joined the room. I gave you some feedback on your trade from Friday. If you scroll up, you'll be able to check it out. But your charts were a perfect example of understanding where the market is likely to go and then using that for profit targets. And then finally, we're going to understand where the market is likely to stop. Those termination conditions, as we call them. And termination conditions can end a trend. So they can create a reversal. Price typically reacts to Fibonacci. And because it does, we can identify these areas before the market reaches them. We can use these termination conditions to avoid that next trade when the market's not likely to continue. And that termination condition will also create an anchor, if you will, for the highest probability trend trade that we teach. And that's the everything agrees trade, the high probability trend trade that happens after a termination condition on your large chart is going to be the trend trade that's typically the most successful. So that's going to be our focus for the first 30, for your first 30 days, that high probability trend trade. And guys, I want you to write this down on a piece of paper. You're learning entries. You're learning how to enter the market where it's most likely to continue. And then from those great entries, you will build and develop a management plan. But getting in at the correct spot should be your goal for the first 20 days. Being able to recognize where the market is likely to continue, having the confidence and the trust to enter the market at that point, and then we'll work together along the way to build a management plan that suits you, that suits your tolerances. Some people need to make quick profits and get the hell out. Some people like to hold for the home runs. Everybody's different, and that's one of the cool things about trading. Our plan is going to be the same plan that we do every day, guys. Our first hour, if you go back and look on our Nexgen YouTube page, every hour is almost identical. And then the second and third hours of classroom are when it really changes, when it really caters to your needs because of the questions that you ask. And every morning I remind you guys that there is a step-by-step path to becoming a confident trader ASAP. And this is a path that's been proven for the last 25 years. This is a path that is going to shorten your learning curve. This is a path that's going to create confidence faster. And it begins with posting your trades in the class. Every trade you take, win, lose, or draw, get that picture into the class. Because what we're going to do is we're going to talk about it. We're going to talk about advantages. We're going to talk about disadvantages. We're going to talk about what went right. We may talk about what went wrong. Guaranteed, I'm going to celebrate victories, guys. If I see you doing something well, even on a trade that loses, we're going to talk about what you did well. We're going to create a little confidence because of your understanding, and then we're going to refine that process to get you where you want to be. So everything you do, I want you to post it in the room. And then on top of that, I want you to use that spreadsheet that Nexgen provided, that 90-day worksheet. And what it does is it creates a trade journal for you. Every time you take a trade on simulator, you're going to be able to record it into this spreadsheet. Every time you take the trade, you're going to be able to identify what type of trade it was, what the conditions were, how you felt, what happened, whether you won, whether you lost, all these great things. And the idea isn't to keep you busy. The idea is that when you wake up tomorrow morning, guys, I want you to look at every trade that you took today. What worked and what didn't work, right? And here's the key is everything we do is rules based, and there's going to be times where a trade doesn't work. And these are the ones that you have to post in the room, because often what I find is that when you take a trade that typically wins 70 to 80% of the time, it's obligated to lose 20 to 30% of the time. It's just a mathematical fact. But if you come through and you post that trade in the room and your rules are on there and you annotate that chart, what you're going to find is sometimes there's a cost of doing business. You may take the perfect trade and it might not work, and you might be down on yourself a little bit. You might think that you're doing stuff wrong. You might think that you're not really grabbing those lessons, when in reality, you did an amazing job and every advantage was in place. It was just one of those 20%, one of those costs of doing business. Why it's so important to get these trades into the classroom, and then go back and look at those annotated charts so you can see what worked, what didn't work, what felt easy, what felt forced. And each and every morning, you're going to do a brief historical study that's going to prepare you for the day. It's going to accelerate your learning. This is your number one priority as a brand new user, as someone learning the software. Post those trades in class, track them in the sheet. We're going to spend the first hour of every day learning the trigger line and Fibonacci rules for when it's okay to trade. I'm going to give you the rules. We're going to talk about the advantages. I'm going to give you checklists to keep you accountable. I'm even going to provide you, when we're done talking about the rules, a very simple plan for you to follow for your first 30 days while you learn to read your indicators until you can kind of build your own version. I need you to simulate your trades daily. Don't say something like, you know what, I'm not going to simulate until I have these rules down perfect. Guys, it's easier to get them down perfect if you get out there and make mistakes, right? I used to race motorcycles with a guy, and he said, how do you know where your limits are if you don't go screaming past them every now and then? And simulation is the same thing. It gives you the ability to practice, to make mistakes, to correct mistakes, and it does it with no financial risk. We're going to simplify a lot. We're going to simplify down to 2 trades. We're going to talk about the highest probability trend trade. That's going to be the first trade that we talk about. And then we're going to talk about what we call a medium probability trade. And I'm going to go to my glossary of common terms. A medium probability trade is going to be defined as when most of your indicators line up for a trade, however a small issue exists. This is your second trade because it's your chart reading. It's your study on the high probability trend trade that's going to allow you to recognize what that small issue is. And this may be the vast majority of your trades. When you're executing these trades, you're going to take them, you're going to manage them assertively, which means that you're going to identify trouble spots with your chart reading. You may take quick profits. You might get to a zero loss level as soon as you can. But we're going to stay on this path. We're going to start with the highest probability. And then I'm going to introduce you to your first medium probability, because let's be honest, we're human. And sometimes we get bored and we need other things to look for, right? After class, go back and use Market Replay. You can use it on NinjaTrader 7, NinjaTrader 8, and it's going to allow you to replay the day. You can go back and you can fix your mistakes. You can take the trades that you skipped or skip the trades that you shouldn't have taken. And then once again, it's encouraging. Take pictures of the correct trades. Guys, put yourself in a position where you're taking 15 pictures a day. It feels like a lot on day one, but let me be honest with you. I've already taken 15 pictures today, and it's 6:19 in the morning here. And I'll probably take 30 pictures before the day is out, and I do that almost every day. But 15 pictures a day is 300 pictures a month. It's 900 pictures after only 90 days of study, and you will be floored at your ability to read your charts, to recognize patterns when you have 900 pictures in the quiver. So take a lot of pictures and repeat this process every day until you always take the correct trades, until they become easy, right? until you understand the looks so that they're easy. And this spreadsheet that was provided to you is also going to help with that, guys. There's a section called My Personal Trade Setups. And you're going to spend your first 30, 60, 90, 120 days. Every time your rules are met for a trade, take a picture, drop it in the room. Every time someone in the room posts a picture where all the rules are met for a trade, steal them, drop them into your spreadsheet. Because remember, your first 30 days is nothing more than entries, right? We're looking to get in the absolute best of the best spot. And from those entries, you're going to create a management plan. You're going to be able to take those great entries and you're going to learn how to manage those trades. That's the second piece of the puzzle. Then your chart reading is going to grow exponentially. You're going to understand patterns, recognize patterns, and see things that not only provide you an advantage, but also take those advantages away. And then finally, there's a section up here, and it's called termination conditions. And I'm pretty sure John Novak put this into the spreadsheet because I traded into termination conditions every day. That was my weakness. And I had to go through and I had to annotate an awful lot of termination conditions to start giving myself that second advantage, the one of a clear path. So, guys, I'm going to give you this picture. Embrace it. You may try to fight it. A lot of people do. I'm going to encourage you, if you don't do anything else from this, guys, post your pictures in class. Be an active part and participate in your own education. You will see the advantages, and you'll see them rapidly. So we're going to talk about the high probability trend trade. This is a trade that has only 3 rules. Each of these rules is going to provide an advantage. Rule number 1 says that your large chart needs strong trigger lines, and that's going to provide you the advantage of momentum. Good morning, Debbie. Rule number 2 is going to make sure we're not trading into those areas likely to stop the market, and that's going to provide you the advantage of a clear path. And then our rule number 3 is going to be able to identify that area where the market is likely to continue. More chart reading, right? That's going to give us the advantage of an area. And the reality is that these 3 rules create a recipe for a trade, and a trade is nothing more than incorporating these 3 advantages on only 2 charts. You're going to have a large chart, and your large chart is going to define direction. You're going to understand which direction the market's moving based on the simple color of the background. It's also going to define momentum, and it's going to define areas. And these concepts are on a broad stroke of a brush. They are utilizing one bar on a large chart to be able to recognize direction, momentum, and areas. Your first 2 rules, your first 2 advantages happen on the large chart. You will have the advantage of momentum as well as the advantage of a clear path, nothing between you and your targets on that large chart. And when they're met, you're going to go to a small chart. You're going to go to that second chart, and guys, this is an entry chart. This is the chart that's going to identify where the market is likely to continue. You're going to use rule number 3, which is going to provide you that entry area. And by doing so, it's going to allow you to reduce your risk and increase your profit potential. So simplicity is really my favorite word when we talk about this. It's a foundational approach that I go for when I teach this classroom. And I do it because if you try coming at being a day trader and saying, hey, I want to make $1 million, it becomes difficult. It becomes overwhelming. It's like eating an elephant, right? If you sat down to eat an elephant, you'd be overwhelmed. And the only way to do it is one bite at a time. So I've kind of drawn out this little path, guys. And this is your path to getting to where you want to be. First, we're going to understand trend. And then we're going to understand momentum. And then we're going to understand that clear path. And then we're going to understand that entry area. And if you allow yourself to be new, if you give yourself a little bit of leeway, right? A little bit of grace. Hey, I'm brand new. This is my first day. It's going to make your life a lot easier. Focus on 3 rules. Focus on one thing. Get good at one thing, and then move on to the next thing, guys. So let's talk about that high probability trend trade. I'm going to pull up the tutorial section. And our high probability trend trade starts with the T3 trigger lines. And those T3 trigger lines are going to be involved in most everything you do. And there's 2 parts to the trigger lines. The first part whoops, let's bring that up a little bigger, right? The first part of the trigger lines is going to be the small trigger lines, and the small trigger lines are the solid lines. They're the faster of the two. They work in conjunction with the large trigger lines. The large trigger lines are dashed. They're the slower moving average of the two. And the first thing that these are going to do is they're going to define your trend, guys. You're going to understand which direction the market is moving, and that's going to be as easy as looking at background color. When the small triggers break above the large triggers, that background is going to paint green. And when the background paints green, it lets you know that you're in an uptrend, that you're only looking for rules to be met for high probability trend trades long. Keeping it simple, right? Trading with the trend. When the smalls break below, well, now we're in a downtrend. The background paints red, and we can identify that you should only be looking for rules to be met for high probability trend trade short. As the first advantage that you give yourself is trading with the trend, and it's pretty simple. Green is up, red is down. Let your rules be met to trade with the trend. And I put the question at the top of this, what if you only traded with the trend? What if you never fought the trend? How many mistakes would it eliminate? Those of you that have been around for a while, go look at your charts. How many mistakes would that pull out of the mix if all you ever did was trade with the trend? Once you have the trend, we have to define momentum. Whoops. And once again, we're going to use those T3 trigger lines. We're going to use the small and the large working together to give us the advantage of the momentum. So when your small triggers break above the large triggers, when the large triggers are wide, they're angled in the direction of the trend, this is what we call a strong trigger line. This is rule number one, visualized. Smalls above, larger wide, everything angled in the direction of the trend. It's the space that's created between the small and the large that lets you know that the odds are favorable for the market to continue in the direction of the trend. And odds favorable momentum is going to be a phrase that you hear a lot in this classroom. Odds favorable momentum, let's go back to the manual and really use it. Odds favorable momentum is your best of the best look for buying a pullback to Fibonacci support in an uptrend. Good morning, John Novak. Or for selling Fibonacci resistance in a downtrend. Using that momentum indicator on your large chart is going to set the tone. It's going to let you know what the deep pockets investors are doing, what their opinion is of the market. You commit to odds favorable momentum. I can tell you through experience that when every trade you take has this best of the best look, it creates advantages, and it even creates advantages that can almost hide other mistakes. But when the small triggers work their way back into the large triggers, we call this a weakening of the large triggers. And when you weaken large triggers, anything can happen up or down. You throw away that advantage of odds favorable, and you go into an anything can happen scenario. And I've got a picture. This is my rule number one picture. And I really like this picture because it shows you that over the course of the day, over the course of 10 or 12 hours, you're going to find yourself in both scenarios. You're going to find yourself with odds favorable momentum. And you'll notice if you go back and just take a picture that the market tends to continue in the direction of the trend when those triggers are their absolute strongest. This tail or this wick on a large chart is nothing more than a pullback on a small chart. This is your potential entry right at the bottom of that wick for continuation in the direction of the trend. When we have these anything can happen triggers, these weekend large triggers, you'll notice that that's the precursor to a reversal in the market. You see it from a low, you see it from a high, that reversal happens. There's that odds favorable momentum in one of those tails, and sure enough, it pushes down in the direction of the trend. Sometimes your large and small aren't going to agree with one another. Sometimes your large and small aren't going to agree with the background. When this happens, guys, this is a little bit of confusion. This is a sorting out period in the market. This is where the buyers and the sellers are fighting for supremacy, but nobody has a clear advantage yet. Nexgen users, you have the amazing advantage to never get caught up in consolidation with these simple three rules, with these simple three advantages. Or I won't say never because that's a blanket statement. You will probably avoid 99% of it if you simply wait for the rules to be met. Let those guys fight it out, and what's going to happen is ultimately they're going to bring you back to odds favorable momentum. So rule number one, guys, Odds favorable momentum, the best of the best look for buying or selling pullbacks on a smaller, faster chart. This is going to be your first advantage. This is going to be the first thing that you give yourself every trade as you look for the high probability trend trade. Is everybody comfortable with that? This one, most people recognize it in the first 5 minutes. If you go to a live chart, and I put only trigger lines on this chart, you'll see just how easy it is to recognize. When the smalls are below the large, that's your odds favorable. When your smalls break above the large, there's your odds favorable. Guys, there's some of those tails. There's some of those potential entries. And look how the market continues on. Odds favorable, there's a tail. The market moves down. Odds favorable, there's a small tail. And the market moves up, guys. Rule number one is the advantage of momentum. Rule number one is going to set the tone for everything you do in the market because it creates a market that's likely to continue in the direction of the trend. Once we have that advantage, rule number two, also on the large chart, says that termination conditions are false. We're not trading into an area that may stop the market. And this is going to provide you the advantage of a clear path. And the areas that we're looking at, the areas that may reverse the market, are going to be red Fibonacci resistance, blue Fibonacci support, yellow 1-to-1s, or they can also be this divergence high, this magenta line that prints from a pivot that's losing momentum, or a divergence low. When a pivot loses momentum from a low, this divergence line may print. And it's a two-part recipe to get you to be able to recognize whether or not these areas are likely to stop the market. Two things have to happen. The first thing is that price reaches an area, meaning that as these dynamic Renko bars come down and they reach blue Fibonacci support, all you have to do is ask yourself, where are the T3 trigger lines? If all of your trigger lines remain above this area of support, you've reached an area that may reverse the market, that may create a bounce too big to trade successfully. Rule number two is it met, the clear path isn't present. Hey, Dano, welcome to the room. Your test came through loud and clear. And that is quite the avatar. I like that. Price reaches support. Absolutely no trigger lines are able to make it through that area, guys. This is your giant red flag waving. Hey, you've reached an area that may stop the market. The path isn't clear. Up top in this picture, you can see it as well. Price got to that area of support and the trigger lines remained above. Guys, this is your visual cue. No more short trades. You have to wait to see if that market reverses or if the area breaks. And if it breaks, we may find ourselves with a clear path once again. An area is considered broken when both the small and the large triggers make it through the area that had the potential to be a termination condition. So there's only two scenarios for the brand new user. If price reaches an area and absolutely no trigger lines break through that area, the area is not considered broken, the path is not clear, and rule number two hasn't been met. If both the small and the large triggers get to the other side of the area in question, well, now that path is broken, right? That path is clear, the area is broken, resistance begins to act as support. You can see the odds favorable momentum, and there's another one of those tails. You're going to see termination conditions all day long, guys, and that's part of the patience piece. 90% of what you do during the day is going to be waiting for these statistical advantages to be present, is waiting for the advantage of momentum, waiting for the advantage of a clear path. Sometimes it's not going to be present, sometimes it's going to be there. Dano, perfect. You're having the best day one ever. Nice job, Dano. And you're going to find that price may create a pivot, and that divergence line that we know can behave as a termination condition may print. Just a pivot with divergence is not a termination condition. Embrace the idea of the recipe, guys. Price must come back and reach that divergence low, at which point all of your triggers remain above. Now we have what's called a pivot stop out of a prior divergence. These pivot stop outs can be very powerful, especially when they correspond with Fibonacci areas of resistance or support. So not a termination condition, but when price reaches it and the trigger lines remain above, there's a termination condition in place. Same thing up here, price reaches resistance and absolutely no trigger lines break through. The market pushes all the way down to support and absolutely no trigger lines break through. 90% of what you do during the day is going to be sitting on your hands, waiting for your rules to be met, waiting for those advantages to be present. Price ultimately comes back up to resistance. It comes to that divergence high, and it comes to a second resistance, and none of your trigger lines break through. Now you have a pivot stop out of a divergence high. That on its own is a termination condition. When it corresponds with Fibonacci, it becomes even more powerful. And when you take a termination condition that creates a full reversal, maybe from a top, your large triggers go from green to red, your small triggers go from green to red, it gives you that odds favorable. We're going to call a termination condition that creates a full reversal. We're going to call this a strong top or a good top. And for every strong top, there's an opposite side, right? Price reaches one-to-ones, absolutely no trigger lines break through. Visually, it becomes easy to recognize. If this termination condition creates a full reversal, meaning that the large turn from red to green, smalls get to the other side, that termination creates a full reversal, and it gives you odds favorable momentum, and it gives you a clear path. There's another one of those tails, guys. This is your highest probability trend trade ever. A high probability trend trade, a rules met trade that happens after a termination condition, this is your best chance of success. This is the look that typically wins 70 to 80% of the time. Is everybody comfortable with the recipe for a termination condition? I try to keep it pretty simple. I'm going to give you a couple pictures. Here's termination conditions at a high. You new people, don't be shy. Feel free to type yes in the room, say whatever you need. Termination conditions from a high. There's one of those pivots with a loss of momentum. That divergence line prints, guys, that's not a termination condition. When price reaches the area and the trigger lines remain below, now we have a termination condition in place. When this termination condition creates a full reversal, we're going to call it a strong top. Price reaches resistance, all of the trigger lines remain below, even with that odds favorable momentum. No more long trades, thank goodness, keeps us safe. Price reaches one-to-ones as well as resistance. All my trigger lines remain below, termination condition in place. Those are terminations at a high. They look exactly the same, just go in the other direction from a low. First picture, price reaches one-to-ones. We know not to go short into this area because it may reverse the market. When it does, if it does, we now have a strong bottom in place. We have that precursor for the highest probability trend trade that we can take. Termination condition, price reaches support, absolutely no trigger lines break through. Here's one of those pivots. There's a loss of momentum. On its own, hanging out in the middle of nowhere, guys, it's not a termination condition. When price reaches that area, none of the trigger lines break through. Now we're looking at a termination condition that creates a full reversal, giving us our best chance of success. So guys, this is it. In the beginning, you're either clear or you're not, right? Price reaches, no terminations, or no long trades. Small and large breakthrough, the path is clear, look for the rules to be met. As you grow with the software, as you develop your ability to read the software, remember I said that you're going to recognize a medium probability trade. This is your first medium probability look on a large chart, guys, and it's what we call a 50-50 look. And it's not a 50-50 look because your odds of success are 50-50. It's a 50-50 look because your small trigger lines have broken above the area and your large trigger lines have remained below. The key to this look is odds favorable momentum, making sure that you have a market that's likely to continue in the direction of the trend. When you have small through the area with odds favorable momentum, when you have large still below, this becomes an area with the potential to break. But it hasn't broken yet, which means that you don't have a clear path, which means that you have knowingly and willingly sacrificed one of the advantages that create a trade. And this is what makes it a medium probability trade. One issue exists. If your issue is the clear path, when we talk about entries, guys, we're going to make sure that we don't forfeit momentum. We're going to make sure that we don't forfeit that entry area, and that's going to give you the best chance of success on your first medium probability trade. So areas are either broken, whoops, that's the wrong set of pictures. Areas are either completely broken or not broken in the beginning, right? Keeping it simple. As you learn to read the software, you get areas with the potential to break. And guys, those are using areas for termination conditions. That's how you're going to identify change in the market using a comparison of the T3 trigger lines and those Fibonacci areas. Sometimes the market's going to turn from nowhere. Sometimes you're going to get a bounce. I had a clear path. I'm in a downtrend and the market went up. I had a clear path. I had odds favorable momentum and that market went down. On a large chart, you're not going to be able to recognize that change. It's going to seem as though it happens from nowhere. And this is where you're going to use a small chart. This is the only termination condition that I look for on a small chart. Can't stress that enough. 3 divergences in the same price range may terminate a trend. You're going to see it on a smaller, faster chart before you ever see that change happening on a large chart. These 1, 2, 3 losses of momentum, it may terminate the trend. It becomes even more powerful when those trigger lines go from odds favorable momentum to anything can happen. It becomes more powerful still when that third divergence is higher than the previous from a low or lower than the previous from a high. Guys, when the market's losing momentum and it can't even reach that previous pivot, that's very powerful. So these are 3 different termination conditions. 3 in the same place may terminate the trend. We're going to respect it on a smaller, faster chart and not look for the short trades, not look for the long trades. 3 divergences with weakened triggers, anything can happen triggers, is also a termination condition, but it's even more powerful. And then 3 divergences where that final pivot is higher than lower than the previous is more powerful still. You're going to see this from a low or this from a high at those times where the market seems to be turning from nowhere. This is going to be a little bit of a safeguard, letting you know that change is happening. This is also going to be a way that as you learn to read your indicators, learn to read your charts, it's going to help you manage out of trades that don't seem to be working. If I take the perfect entry, but 3 divergences print after, that's my visual. It's time to exit the trade. It's time to get out of that trade because change may be coming. If you're on a medium probability trade, you'll be able to recognize the forfeiture of momentum and manage assertively. So, guys, termination conditions, the whole idea is safety. It's letting you identify areas where the market may reverse. And this is my large chart on the NASDAQ. And this is recent. Price reaches, resistance, absolutely no trigger lines go through, and look at the reaction to the market. It reverses, it takes away any long trades, and then it comes all the way down to support. Absolutely no trigger lines break through, nothing to do here. And from support it goes up to resistance, and guys, this is that pre-market, this is that early morning battle between buyers and sellers. From resistance to support, from support to resistance, and then from resistance all the way back down to support again, and those trigger lines don't break. And then we get a higher divergence. We see that loss of momentum higher than the previous, and that's a good indication that we're probably running up a little bit. And sure enough, it does. And there's a couple of those tails on the way up. We'll go back and look and see if there were opportunities. But if you scroll back, it's going to give you the ability to see that this happens all the time, that odds favorable momentum, that termination conditions are present. And when a termination creates a full reversal, that full reversal provides odds favorable. Guys, there's those tails all the way up. Potential entries on that smaller, faster chart. And currently, we're coming from resistance. It produced odds favorable, and we're trading into support. Guys, 90% of what you do is just waiting for advantages. 90% of what you're doing is waiting for the rules to be met, waiting for the opportunity to have that recipe for a trade come together so that you can enter the market. On your large chart, we've established the advantage of momentum. On your large chart, we've established the advantage of a clear path. So guys, now it's time to turn your attention to the smaller, faster chart. It's time to go to that refinement tool and look for the area where the market is most likely to continue. Rule number 3, providing the advantage of an entry area, says that we're going to use a limit order to buy or sell a pullback, and that pullback is going to happen at an area inside of favorable large triggers. So by using a limit order, we're going to let the market come to us. If everything is in an uptrend, it means that we're going to let the market come down to us. We're actually going to buy the market as it retraces on a smaller, faster chart. But remember, the large chart leads the way. The large chart is defining momentum. The large chart is defining a clear path. We can use one bar on that large chart, and what happens in only one bar on the large chart happens in 15 to 30 on that smaller, faster chart. So we're not getting caught up in fluctuations. We're not worried about anything other than identifying the area of resistance or support inside of the favorable large triggers. And we're going to do that by creating a window of opportunity. When everything says up on the large chart, when the momentum is the strongest, when the path is clear, we're going to turn our attention to the small chart. This is where we've made the decision. It's time to take a trade. You should have strong triggers. Small should be above the large. The large should be wide, angled in the direction of the trend. And on your small chart, you're going to see two sets of large triggers. You're going to see the smooth set that's native to the 5-1. We're going to call those the large triggers. And then you're going to see what we call synthetic triggers. And those are nothing more than the large triggers from your 13-2. The smooth triggers are from the 5-1. The stepped triggers are from the 13-2. But when they work together, when they overlap, when they're both strong in the direction of the trend, we're going to call those favorable large triggers. And when you have favorable large triggers, it's going to create your smallest window of opportunity, your smallest area where the market is likely to continue. I'm going to share this picture with you. If you focus on having this advantage in the beginning, it's going to open up doors and let you kind of step outside of that realm as you learn to read your charts a little better. But we're going to keep it focused on the best of the best initially. Everything says up, my triggers are favorable, and I'm identifying the areas that are going to fall within if I get a pullback. Trend trades come from Fibonacci support or resistance, from a mid-band, or from yellow 1-to-1s, any combination of the three. But in order to identify the window, we need that pullback. We need that small retracement counter to the underlying trend. And that begins with a reversal bar on the small chart. This reversal bar on the small chart lets me know that there's a little push down coming. So I'm going to create a window of opportunity. For a long trade, my window of opportunity will extend from the highest point of support, in this case a mid-band, to the lowest point of support, these 1-to-1s, inside of favorable large triggers. And when this reversal bar happens, I identify the window. I'm going to activate a limit order right at the top of the window. So as the market comes back, I'm going to have a limit order waiting right there at 79.21, right at that area where the market is likely to continue, right at the top, at the top of the window of opportunity, because on my large chart, remember, I have odds favorable momentum. On my large chart, there's absolutely nothing in the way to slow it down. So when that reversal bar happens, I can use a drawing tool, and I can go from the top of my triggers to the bottom of my triggers, and then I can even refine that more from the highest point of support to the lowest point of support, and that shaded area identifies where the market is likely to continue. Nexgen users are going to enter at the top because of the momentum. We're not going to let a trade get away from us because we were afraid to watch it retrace against us just a little bit. So every time we enter the trade, going to have the expectation that it may go down to the bottom of that window, and you're going to be okay watching your P&L go against you a few ticks because you know that you still have the advantage of momentum on a large chart. You still have the advantage of a clear path on the large chart. And now you have the advantage of being able to recognize where the market is likely to continue on the smaller, faster chart. And you're so confident through a little bit of study that your initial stop, your protective stop, will go below that window of opportunity. Because remember, anything that wins 70 to 80% of the time, mathematically obligated. 20 to 30% of the time, that stop is going to get hit. It's a controlled stop. This is how you protect your equity. If the stop gets hit and all the rules were met, your key phrase is going to be next. That's it. I had every advantage and it didn't work out. It's a cost of doing business. We're going to allow the market to be wrong every now and then. But the reality is every time you take this trade, the likelihood where the market shouldn't go, K-Pops, that's the phrase, right? And it's really not that low. On this one, outside of the window of opportunity. Well, absolutely. So if I put the stop on support, what happens if it goes to the bottom of the window? It hits the stop, right? But I'm still in the area where the market is likely to continue. Does that make sense? Every time I take a high probability trend trade, in my brain, this is my expectation, that it'll go to the lowest point and then continue, if it's going to continue. So because of that, I want my stop a little bit below it. And in this case, that's about a 15-tick stop, right? Just give it a little more. And I do that, K-pop, because I have the advantage of momentum, because I have that clear path, because I've done my study and I know that this is where it's likely to continue. See how it hits the mid-band and it comes down almost to that second level of support? I'm giving it room to breathe. But 70 to 80% of the time, profit target reached, right? Feeling good about it. And then once this reversal bar happens, K-Pops, I'm going to take that stop and I'm going to put it below the reversal bar, because now everything's happened that I expect to happen and I'm going to be able to reduce my risk. And what you're going to find is you're going to see a lot of people in this room posting pictures with 3-4 ticks of risk after that first reversal bar is made. So guys, this is your highest probability trend trade. The idea is that you recognize it, but more importantly that you study it, that you go back and you start developing a little trust in it. When the rules are met on the 13-2, you can develop that trust by circling tails on the 13-2 as they line up. When you have a clear path, when you have odds favorable momentum. If you look left to your entry chart, you can see, did that circle, or in this case a square, line up with an area of support inside of favorable large triggers? And if it did, you know that you have the highest probability trend trade. Guys, we're not waiting for tails on the large chart. We're trading from areas on the small chart. It just happens that what happens in this one bar happens in all of these bars, so we can refine that look and get the absolute best of the best. And if we go back to the live market somewhere in here, let's do this. Let's only put momentum on there. Let's not cloud it. And you let it run, you get another tail. Do you add to your position? If the rules are met, K-Pops, absolutely you could. Whoops. So let's do this, guys, with only the advantage of momentum here, right? Let's just focus on an entry for a second. I'm going to make this a little bigger and try to stop rewinding like that. Everything says down. Odds favorable momentum. And here's one of those tails. If I go to a smaller, faster chart, the first tail is a pullback directly to resistance inside of favorable large triggers. Ultimately, multiple divergences print taking us out of the trade, right? But from 50 to 39 is $240 worth of profit from that mid-band all the way down to support, guys. Your job is to just scroll back and look for these tails. On a larger chart, whoops, man, I am not scrolling well today. So let's go back at 9:31. Odds favorable, everything says up. I'm going to circle a tail. All I'm doing is developing trust, guys. All I'm doing is visually getting this look. There's a pullback directly to support inside of favorable large triggers. And K-pop, see how it goes to the bottom of the window? It happens sometimes. But if you understand that that's a possibility, well, then it makes it easier, right? It makes it easier to stay calm. It makes it easier to stay in these trades and get the best of the best, right? And we see it again over here around 7 a.m. This drill will help you at the end of the day to see maybe where you missed an opportunity. This drill will also help you reinforce the looks that you're looking for, reinforce those good rules. Absolutely. So let's do this one, K-pop. Let me get rid of the second circle. Let me get rid of both circles. In K-pop, I want to throw something out there. Well, it's still there. I just took the circle off, right? So let's start with the first one. Odds favorable, no termination. You comfortable with that? Rules met on the chart, and you can also see that we're coming from a termination condition. Everything says up on your smaller, faster chart. The triggers are up, they're overlapping. We can identify the areas inside, right? Waiting for a reversal bar. And there it is. So I'm going to draw a box from the top of my triggers to the bottom of my triggers. But then I'm going to refine it a little bit. From the lowest point of support, whoops, to the highest point of support. There's your window of opportunity, right, K-Pops? Market comes down, reaches support, starts back up. Rules met, you're in. From 38 to 44, 6, that's $120. But one of the characteristics of the NASDAQ is when these trigger lines start coming down strong, sometimes there's a second push. Oh, doesn't do it on this one. Cool. So let's do this. Let's go through the whole thing. I'm going to create entries and all that good stuff. So my limit order, K-Pops, goes just above support. So 38.50, that's my entry order. You comfortable with that? Right at the top of the window of opportunity, right where the market is likely to continue. There's my entry. So as the market comes down, it reaches my entry. I'm in the market. I have the advantage of momentum. I have the advantage of a clear path. And now everything says go, right? So where's the initial stop? Where are we going to place that protective stop initially? Right down here, below that window of opportunity. That's about $100 risk on NASDAQ. That's 5 points. We'll make it Selman. So far, so good. Everything says up, everything says go, reversal bar, top of the window. We're in. And then check this out. It comes down a little more, no worries. And then we get that reversal bar. And now, there's my risk. Like a sniper, isn't it? And this happens all the time. So I'm in, and I'm going, and it looks good. So if we're in at 38.75, right? K-Pops, every great entry has a management opportunity. And this is what I want you to remember, is that you don't have to hit home runs right out of the bat here, right out of the gates. The market goes up. From 38.70 to 48.70 is 75. That's 10 points to get up to that trouble spot. That's $200 worth of profit right there going into a divergence high. So it's up to you what you want to do. Some people will say, man, I'm going to take some money, right? I'm going to get paid. That's what I'm here for. And the market comes up, and I get a second divergence. But now I've got weaker triggers. And the market comes back and it doesn't do anything, right? Two divergences isn't a killer, K-Pops. You're still in the trade. You're still up. At this point, you're up 13 points. And it keeps up. And now we get a third divergence in the same location. K-Pops, remember 3 divergences in the same location may terminate a trend, right? And you'll see that divergence true right about there at 48, right at about $200 worth of profit. You can exit this trade. You can say, you know what? The market may push lower. This probably isn't my trade anymore. Hopefully you grab some quick profits on the way up. When the market creates a pivot, you could actually have a stop right here as well. But 3 divergences, you can exit that trade, and now you're out. And now we go to that next one, right? So you get another bar, and everything says up, and everything's going, but you just had 3 divergences. You know that it may terminate the trend. So K-Pop, no matter what happens next, notice how your large triggers are rolling, but your synthetics are up. Don't have favorable large triggers. I have 3 divergences against it. I'm giving away the advantage of momentum. I'm also giving away the advantage of a clear path because that's a termination condition. K-Pop, the hardest thing you're ever going to do is absolutely nothing when the rules aren't met. Look how the market pushes down. And here's the kicker. It still goes up. In K-Pop, what you're going to have to do is you're going to have to say to yourself, even though the market continued with a loss of momentum, no. In the beginning, K-Pop, you're going to say 3 divergences might terminate the trend. 3 divergences with weak triggers makes it even worse. 4 divergences makes it even worse. But the reality is that sometimes it's going to go up anyway. K-Pop, your trade was from here to here. And this one becomes risky. This one loses advantages. This one becomes a low probability scenario that happened to go in the direction of the trade. Does that make sense? It looks good, doesn't it? But now if we add in the areas, I want you to see what created this indecision. Let me go back to where that was. That was 7:15. It's one of those 50-50 trades, right? So K-Pops, smalls above, large below. When your smalls roll again, maybe another opportunity to continue on with that great momentum and that path kind of clearing coming from a termination. Your first shot looked great. The second shot was a little riskier. In the beginning, it's all about advantages, right? It's about getting those advantages in place. And it means that you're going to have opportunities, or there's going to be things that happen in the beginning that aren't the best of the best, and you're going to watch them go, right? Termination condition creates a full reversal. Full reversal provides odds favorable. The smalls break through. And look how it pulls back to that support. That may be an opportunity as you grow with the software. In the beginning, you're going to keep it simple. You're going to keep it easy. You're going to keep it focused on the absolute best of the best. And then from that, from your ability to read charts that happens with the high probability trend trade, K-Pops, you're going to see opportunities that are endless. Guaranteed. So guys, I'm going to give you some stuff right now. Is everybody comfortable with the high probability trend trade? If it's day one, it's going to feel a little overwhelming. If it's day two, it's going to be easier. By the end of the first week, you're going to have a great idea of what you're doing. Guys, if you use this checklist every time you take a trade, I'm going to drop it in the room right now. This is a checklist that I've never had anybody follow it and do worse than 70% winners, right? This keeps you focused on the absolute best of the best, the advantages in place. I'm also going to give you a checklist that has those same advantages, same checklist, but pictures straight from the resource material, helping you identify what each means. Guys, this is a great study tool in the beginning. And then finally, I'm going to give you guys what is the most basic plan for new users. So K-Pops, this is your first one, right? This is the one that gives you the opportunity to understand entries. First 30 days revolve around getting into the market at the best spot as you learn to read your indicators. When we talk simplicity, never fight the 13-2 direction, never fight those triggers, never fight your large chart, guys. It rarely works out. Here's your checklist. There's some pictures of a short, of a long. And then K-Pops, this is the one. Right now, you're excited about adding on, about getting the absolute most out of everything, right? Man, if I get in, I want all the money. But the reality is every trade isn't a home run. So the same way you're going to use a mechanical approach for entry, in the beginning, use that mechanical approach for exit. Pigs get slaughtered. I like that. Putting that on a t-shirt. But that makes sense, right? So your initial stop is going to go outside of that window of opportunity. There's your perfect entry. Stop where the market shouldn't go. And there's nothing to do at this point, guys. Keep it mechanical. Don't form opinions, right? Don't let hope cloud your vision. Very pragmatic. Stop goes where the market shouldn't. And there's only two things that can happen at this point. Either A, you do get stopped out, you take a small loss, but it's not a huge loss, it's not derived from hope, and you live to fight again, or you get that reversal bar, at which point you can reduce risk on that trade. You can put a stop behind the reversal bar. Now you've got a few ticks risk. You still have every advantage in place, and that smaller chart has headed back with the trend, right? Nothing to do now. If the reversal bar happens, then I move the stop. Nothing to do. I either get stopped out for an even smaller loss, or it goes to my first target. And the first target, guys, keep it simple, right? We're in this to get paid. First target's $100. If it reaches $100, I'm going to move my stop to break even. And now there's nothing for me to do. Once again, I'm not hoping, I'm not praying. I'm keeping it pragmatic in the beginning as I learn to read my charts in the moment. I've got $100 in the bank. There's a dopamine kick. I'm getting confidence through the memory of success. I have absolutely nothing to lose, so it makes it easier to hold for that second stop. If I hold for that second stop and it makes it, K-Pops, this is a $300 trade, right? This is the best of the best entry. This is strong management. We're managing risk first. It's easy profit targets. It's $300. And there's a lot of you guys, especially you guys that have been doing this for a while. They, well, I want to make $1,000 a day. This is one trade at $300 a day, right? What if you catch 3 of these? There's your $900. What if there's 4? Well, if there's 4 of these, one of them's likely to lose, right? Because it's 75%, which means that you're really probably, let's call it $700. 4 trades, 1 loses. And now let's say, you know what? 2 of them don't make the target. Only 1 of them makes the target. The other 2 get stopped out, break even. So that's $500 minus the 2, and that puts you back at the 300. Sounds crappy, right? Oh my gosh, 300. But suddenly you realize that that's a $1,500 week, and that's a $6,000 month. And that's $72,000 over the course of the year from having a below average, a less than normal day. And that's not so bad, is it? 72,000. And then here's the idea is that we're going to use better trades, not more trades. But what we can do is more contracts, right? So that $300 day on a 10 lot becomes a $3,000 day. And that becomes a $15,000 week, and that becomes a $60,000 month. And that becomes a $720,000 year by the same simple trade, by the same simple management, by the same advantages coming into play every time you take it. And a lot of people, Mark, I need more trades. I'm bored. Mark, I want to be in the market more. Guys, the most skilled traders, all of their trades look exactly the same. It's the same plan that provides a statistical advantage. This provides a statistical advantage. This is a trade that typically wins more than it loses. This checklist is devised to give you a plan that's capable of winning while you learn to read your charts. So when you go back to this simple plan, the high probability trend trade leads the way. 20 days, 20 trading days. Pragmatic, emotionless management, pragmatic, emotionless entries. Guys, learn to read your charts. And then it takes you to that 50-50 trade, right? That medium probability trade where the areas begin to have the potential to break, but they haven't broken. In K-Pops, you're going to take this trade. But in the beginning, new users, my job is to help keep you safe. My job is to give you advantages. So I created a checklist as well for the 50-50s. Make sure that it's met. It's going to give you the highest chance of success. You'll grow from this as you learn to read your charts more. But 50-50 trades take a different management style, right? Absolutely. K-Pops, my goal is simple. I want to make $250 a contract. That's it. Trade a 2 lot, I want to make $250 a contract. If I'm trading a 10 lot, yeah, that's it. And I also have a stop loss. If I hit my stop loss, I shut it down, but I don't quit. I go to simulator. And guys, I hit my stop loss some days. I go to simulator and I keep practicing, right? And then what I'll do is if I exceed my target K-Pops, I'll trade until I lose. That's it. So if my goal is $1,000 a day, and I hit that $1,000 and I take the next trade and it's a loser, I'm done. I stop. I only make, what, $750 that day. And that's okay because it keeps me from trying to make up for that loss, if that makes sense. Or you can just stop and go to simulator. Take your grand, right? But take that next trade. Yeah, absolutely. But the biggest thing is if you lose a trade, a lot of people try to make up for the trade, and that's where you start to bend your rules. So keep it simple in the beginning, guys. I'm going to put this simple plan in here. Mad money is lost. It's like gambling scared, right? If you go to Vegas and you lose 5 grand, you go in and you start doubling up, right? Well, I need to make it back. You start making poor choices. Yeah, same thing. So keep it simple initially, guys. Focus on the basics. Focus on the advantages. Focus on giving yourself the best chance of success every time you take a trade, right? There's one of those 50-50s, K-Pop. One divergence, strong triggers, right back to the mid band, and it goes up, right? Some of you caught it, some of you didn't. Some of you it's your trade, some of you it's not. Odds favorable, no terminations coming from a termination condition. That first pull didn't reach an area, did it? The second pull's coming right back to support inside of favorable large triggers. Does everybody see it in the moment? Termination creates a full reversal, provides odds favorable, gives a pullback to the area inside of favorable large triggers. My stop is where the market shouldn't go. Take a picture of it, guys. That's your high probability trend trade. And I know that it's my high probability trend trade because I can put the checklist on it. And I'm going to close it out because it's not about winning or losing for me right now, guys. Your goal is that entry. Look at how it pinpointed. And then I open this up. Is the market coming from a good top or bottom? The answer is yes. Do I have odds favorable momentum? The answer is yes. No termination conditions? The answer is yes. Area inside of favorable large triggers? The answer is yes. Your goal, guys, for the first 20 days is this entry and don't worry about anything else. Take that picture, share it to screencast, right? I don't know why it's making me log in. There we go. You're going to share it to screencast. And when you share it to screencast, You're going to drop it into your spreadsheet, right? You're going to drop one of those into the classroom, and you're going to say, hey, Mark, here's my checklist. Here's my rules. This is what I did. What do you think? And if you were in at 42.25, K-Pops, you've already collected $100 and gone break even. Do you see it? There's your break even now. You already have $100 in the bank with absolutely no risk. There's a big fib at 48 and change. But the reality is from 42.25, if I make it to 46.25 before I even get to treble, that's a $300 trade. Do you see how simple this can be, guys? It's pragmatic. I take profits at 100. I'm at break even. It might get me at break even. I don't care. I'm not worried about that for my first 30 days. The only thing that I'm worried about is getting that great entry, because great entries create manageable trades. And guys, I'm not trading tails, right? I'm not waiting for the tail to form. I don't have to, because I have areas of support inside of favorable large triggers. I don't know if this is going to be a tail or not, but I do know that I had a mid band and I had support inside of favorable large triggers, and it gave me the perfect entry with an easy capture of profits and zero risk. And as you grow with the software, you may say, instead of 44, I'm going to use Fibonacci resistance for the second target. Because how often does it make that resistance area? Quite a bit, right? K-Pops, does it make sense? Doesn't have to be a home run. Let's just make money, guys. Let's have advantages. Let's take the best trades. Let's nail those entries. Let's manage our risk. You may scale out. Take 100, go break even, right? Trade a 10 lot and take 8 of them at 100. That's an $800 trade. And now you got 2 to go the distance with absolutely no risk, right? Do whatever works for you. What you guys are going to find is I'll never tell you how to trade. That's got to be your thing. That's got to be your advantages. That's got to be your chart reading. Nobody's going to pay your bills, guys. You got to do it yourself. But what I will do is I'll teach you to read your indicators. I'll teach you to recognize advantages, and I'll provide you with a plan that you can follow yourself, and you can allow it to either be rules are met or rules are not met. And when the rules are met, guys, it creates trades that have an awful lot of advantages. So you'll sell half of them, you'll make $100 on half of them, and then you'll make money on the second. Call it a day, right? Beautiful. Guys, I'm going to take 5 minutes. I'm going to stretch my legs real quick. If you take a trade, post a picture. If you have a question, post it in the room. When I come back, we are going to talk quite a bit about what you've done. We're going to look at your charts. We're going to look at your pictures. We're going to talk about the advantages, the disadvantages. We're going to talk about everything that you see, everything that I see. And we're just going to move forward from there, guys. I'll be back in about 5 minutes. Enjoy. Stretch your legs. Breathe deep. All right, guys, we are back. We are back, ladies and gentlemen. So look what happened. You get the first one, you make your money, right? Comes back, probably gets you out break even. And right now, some of you are going, man, that's messed up, Mark. I want to make more money than that. And that's totally cool. I totally get it. So guys, as you grow with the software, as you learn to read the software, you're going to recognize that sometimes things change. Sometimes opportunities, they shuffle a little bit. The market's full of fear and greed. But when the large chart still says go, when the large chart still says the path is clear, when the large chart still says everything works, K-Pops, we talked about this on the other one, right? 3 divergences, but the rules were still met. Let the triggers roll. So there's going to be a continuation opportunity off of that trend trade, guys. And this is a little down the road. You're going to have to get comfortable with reading things in the moment. But it's something that works. So K-Pop, there it is right there, right? See that little stab back right to the mid band, right to the small triggers? This was the perfect looking trade. You get in, you make money, you manage out, protect your capital, right? Take a second opportunity at 43.50, and you get paid again on the way up to the trouble spot. Maybe break even again, right? Everything says up. You've got a couple ticks risk on it, willing to risk it. You've already been paid on the scaling on the first one, and it's mechanical, right? It's methodical. Your large chart still says we're going up though, doesn't it? And now the only thing that's changed is now your small indicators have said it as well. So I thought it was kind of cool that that happened. And guys, the way you read charts is going to make it easier for you to manage these trades. I'm going to scroll to the top of the day. I'm showing you guys what it looks like. I'm going to start looking at pictures. We're going to go through. We're going to talk about them. And I'm going to scroll back and forth, trying to answer all the questions as well. So I'm going to do a couple, then I'm going to scroll. I'm going to do a couple, then I'm going to scroll. We're going to start off with this one. Momentum is on the right side. Odds favorable momentum. Coming from a termination condition that creates a full reversal. Everything says up. And Joel says he's just waiting on that good old reversal bar. And then when he gets it, he uses his checklist. And when he uses his checklist, he has yeses across the board, right? Odds favorable, nothing in the way. Area inside of favorable large triggers. And look how he's anticipating the entry here. Man, Joel, this is such a great looking trade. And then we get the next picture. Same one, areas inside. I like that you gave us, guys, this is 5 or 6 pictures, one trade. And Joel, I have to ask, because this is so ominous. Before you ever get filled, you say this trade is to fail. What does that mean? Does that mean that you don't trust the advantages? Did you shake the magic 8 ball? Guys, be careful with the language that you use on your charts. This trade is to fail. How about this trade has every advantage I look for? And I'm obligated through my plan to take this trade. Whoops, wrong one. And it did lose, didn't it? Anything that wins 70% of the time is obligated to lose 20 to 30% of the time. Guys, this was the perfect trade. This was an amazing trade. This was every advantage that you'd look for in a trade. And it didn't work. Does it mean that the rules are wrong, or does it mean that this was a cost of business? And guys, when you present these pictures in the room, what you're going to find is that we're going to talk about the fact that everything said up, everything said go, everything did exactly what it needed to do. It just didn't work out. The market was wrong. And we've got to let it be every now and then. Termination condition creates a full reversal. Full reversal provides odds favorable momentum. Safia trading directly into a termination condition, right? Directly into a termination condition with a loss of momentum right off of a fib. Beautiful entries create manageable trades. And I told you guys that momentum is going to cover some of your mistakes, right? But directly into a termination, like without any hesitation, 100%. So you get in, you get paid at the trouble spot, and you're not willing to lose money. Sophia, beautifully managed. I mean, you couldn't have managed it any better. Nice job. Scrolling back up. Joel coming through again. No clear path, right? Not odds favorable. No areas inside of favorable large triggers. Joel, no reason to take that trade. No reason to take that trade. Rules weren't met. And look at this, 3 divergences in the same location. And there's that higher divergence. No reason for shorts there at all, guys. And when you get comfortable with your rules, you're going to be able to avoid those. Gary takes some of the best pictures in the business. When his rules aren't met, he'll say, hey, look, a termination condition. I'm not trading into that. I'm not forfeiting advantages. Study the KISS and the JN video on management. It helped. It was beautiful, Safia. Every trade doesn't have to be a home run, right? Isn't it cool when you can get out of a trade that doesn't work and still make $200 or $300 on it? Good. And then once again, guys, chart reading. Put your chart reading in here all the time. And this is a great example of chart reading, but I kind of countered this one with some annotation. And I want to show you what I did here because I think that this is pretty important. Pivot from space, right? If any of you are liberal arts majors, you may have had the same professor I did or someone like it. Every time I would write a paper, as I worked on an English lit major, I had a professor that would ask the question, so what? I would write something down and he would write on my paper, so what? Why did you put this information here? How is it pertinent to the world around you? Pivot from space, right? So what? What does it mean? Well, a pivot from space means that that market is likely to go down to the mid-band and support, and then we have to rethink. So put that in there. Flat triggers in an HVA. Triggers haven't crossed. Has nothing to do with HVA rules, none at all. It's just a pink line. So I went through and I kind of re-annotated this chart, guys, and I think that your annotation, the language you use, the things that you say, become hugely important to your recognition and taking your ability to read the charts and then applying it to the rules, right? Because as you grow to read the charts, you're going to try to trade your reads rather than your rules. Everybody does it. I've never not had it. Safia, which video here? Ziba, first of all, nice to see you back in here. And second of all, these are the videos that John's been sharing with the class for a couple weeks. They cover a couple different things, but they're all amazing study material. So I kind of re-annotated the chart that was presented to. It's not a termination condition, right? It's a reversal bar. It has a loss of momentum, but it's not a termination condition. But it does give me small below the large and all that good stuff. And since the HVA rules aren't met, this is just a pink line, and it doesn't mean a darn thing. The range chart doesn't mean anything if there's no rules met. So then over on my smaller chart, I put that pink line corresponds to an area inside of favorable large triggers, and the large chart has odds favorable momentum and a clear path. Well, then this chart becomes useful. Otherwise, it's just noise. It's just noise. It's making your brain think about more than it needs to think about. You can see it, you can understand it, but there's really no need to write it. And I did that, and I know that he was only chart reading on this one. This is a wake-up exercise, and I know Gary well enough to know that. But let the reading and the annotations be relevant to the trades. This is what I see. This is how it pertains to a trade. Reading the charts are great, right? But there's no relevance to a potential trade. It's creating noise in your head. It's creating all this stuff going on in your head that maybe you don't need to be thinking about when you could really be focusing on the rules, just like you did here, right? Putting that checklist up, odds favorable, everything says down, and you're saying, give me a pullback. It's time to make money. Great charts. Gary, you always have the most amazing charts. And I appreciate that you post in here because I think it's a lot of great information for everybody. All right, Safia, let's see what you're doing. Safia says, there's that higher divergence. I love those. Everything comes back, no divergence, perfect entry, money all the way up. Safia, rock star. What a great trade. And then Gary, that was it, wasn't it? No divergence, strong triggers, pull back to resistance. That was the one. That was a good look. Multiple divergences on your smaller chart, letting you know it may reverse. Man, I love that look. Great one. Good chart read. Geo, good morning. Oh, that's okay. You know what? I had a feeling that real estate was keeping you busy. Just wanted to let you know. Was thinking about you when you weren't here. Enjoy having you in class. You had to go back to the other 13.2 chart, too much to process. I agree, Safia. It is too much. Geo, let's see what you have. Everything says up, and you hop in, right? Forgot to wait for the pullback? I can't either, Safia. So, Geo, you were hoping for it. Didn't happen. And then you got stopped out right at support, kind of right there. And then you go up and you take it. Your trend trade comes from here, really, down to the areas. And it was kind of a 50-50. And if you just wait for that pullback, use that mid band, it gives you a little more advantage. Getting in when everything rolls, when it starts back up, looks good. No reason to take that first loss, though, right? Geo, I know you were anticipating an area to break. Rule number 3, let it pull back to an area inside of those favorable large triggers. It's going to change the dynamic. It's going to reduce your risk. And look how you're like 2 ticks off of a mid-band right there inside of favorable large triggers. You're literally getting stopped out right where you should be entering. Good look. Excuse me one second. YouTube users, sorry about that. You probably caught my sneeze. I couldn't stop it before I got to it. You guys didn't have to hear it. It's a great read, Geo. Everything's doing exactly what it should be doing. Just a little bit of patience for that best entry. Turns it into a moneymaker. Gary, everything says up. So you say 2 divergence kept you out, right? What about 1 divergence? 1 divergence with a market flow signal. It's easy to say after the fact that 2 divergence kept you out, but Gary, somewhere in here you formed an opinion. Didn't you? Because this is an area inside of favorable large triggers with 1 divergence on a 50-50 and a market flow signal using it for confirmation. I completely agree with the 2 divergences. I wouldn't take a trade with 2 divergences on a 50-50 either, but the first one was a rules met trade. Nice job. Good reads. Let me figure out where I'm at here. I got lost for a second, guys. Here we go. Miss Safia. Oh, Safia. What happened here? Why? Odds favorable momentum? Is this even a 50-50? I'm not going to beat you up, but we're going to point a couple things out here. Price reached one-to-ones and resistance, right? Absolutely no trigger lines broke through. This is textbook termination. What else happened, Safia? Those large triggers were a full bar away, weren't they? So you reached the mid-band and two areas, and the large trigger stayed a full bar away. You don't have any areas inside of favorable large triggers. This trade is the, you know what, I'm bored. I'm going to throw a little hope because of the termination, right? It happens. It's okay. Easy one to avoid, though. But I think for me, and this goes back truth in advertising, no termination conditions on the 13-2. You can't mark yes, right? Area for entry inside of favorable large triggers, you can't mark yes. But even there, you don't have an area inside of favorable large triggers, do you? Your only area inside of favorable large triggers is at 15, 160, 20. This isn't even, Safia, that's so far away. Yeah. I think this one was pretty much doomed from the beginning. And then on your 50-50, no divergence. Okay, you did put no. Yeah, I think you just forfeited a little too much there. That's okay. But then you turned around and made it all back. Yep, I got it. Directly into a termination again. Price reaches support, absolutely no trigger lines break through, divergence prints, and you take it because momentum covers mistakes. At least gives you an opportunity to manage out. So that's two trades directly into areas. Price reaches the area, absolutely no trigger lines break through. Do you see it? I could teach a class on termination conditions with that look. So terminations both ways. You're just working a little harder this morning. You're welcome. Hey guys, it's cyclical. You're going to do this every day. You're going to have amazing trades that follow every rule, and then you're going to fudge your rules a little bit. And it's because you're human. Gary, everything says up. You take a pullback, you wait for confirmation, it gets you in, and you're out at the trouble spot. Gary, beautiful trade. Trading with direction, trading with momentum, trading with the trend, and then waiting for that little bit of confirmation to make you feel a little better about it. Nice job, Gary. And now we're into those termination conditions, and it's going ba-da-da, 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 ba-da-da. That's the sound. Price reacting to Fibonacci. And you knew where it was. You didn't have to get caught in it. All right, Miss Debbie. I can't tell if that's a fib on that chart or a line that you drew. Everything says up. The momentum is up. The path is clear. The entry is perfect. And we know that it went down and then it went back up. Did it make it to 48.50 for you? It didn't make it, did it? We got that second divergence and everything changed. That happens sometimes, guys. Broke even. And you guys that take that $100 made money on that trade a little bit. So good job, everybody. All right, Gary, there's that same one. Beautiful entry, quick profits, not willing to risk it after that. So we know Gary made money on that trade. Perfect entries create manageable trades, guys. Yeah, this is what I'm talking about. Everything says up. The path is clear. You pull back. Safia, easy money. No stress, no worries. I love it. Isn't that easier? Oh, I could run to the store and buy a beer and go to the casino and play slots and just let this one work itself out. That's beautiful. That's your trade, Safia. Remember that one. All right, Gary. Let's see what we did. Beware of the gap theory, right? Price reaches the midband, large triggers stay a full bar away. Just sit on your hands and relax. Great read. And guys, what Gary's talking about here, for those of you that aren't on board with the gap theory, the gap theory states, let's pull up the picture. If price pulls away from those synthetic triggers on your large chart, if it pulls away from those large triggers too fast and too far into a Fibonacci area, whether it's a fib, a midband, one-to-ones, whatever, price is likely to snap back to those triggers. It's like a slingshot. So what Gary's saying is price has reached the midband, and the large triggers are all the way here above that reversal bar marker, which means that price is likely to snap back and close that gap. It's enough to keep him from trying this short right here while his synthetic triggers are so fired up. Felt like you were missing out, but fear of missing out, snapback recognition kept you out. What did the market do after that? Did it close the gap? Let's see. Oh, guys, look at that. And there's the after picture. Price reaches the midband. The large triggers don't follow. Keeps Gary out of the trade. Gary, that was great. It's nice when your ability to read charts gets validated, right? It saves your bacon. Other things about this one, guys, price reached support and absolutely no trigger lines broke through it. That's a textbook termination condition. So you had the gap theory and a termination condition, and then ultimately it heads the other direction. And now you have one of those 50-50s. Smalls above the large are wide. Termination creates a full reversal. You have areas inside of favorable large triggers in the event of a pullback if your rules are met. Great job, Gary. Way to sit still on that one. Zeba! Yay, haven't seen a Zeba chart forever. Everything says up. You take the support inside of favorable large triggers and get paid at resistance. No term on the 34.5, but on the 13.2, should you always ignore it as you did in this trade or consider it a threat? Great question. Zeba, recognize it. It becomes a problem area. It becomes an area that can create a bounce, right? So in most markets, on your large chart, we have synthetic triggers from the 21.3. We also have synthetic triggers from the 5.1, which means, or I'm sorry, areas, fibs. So normally this fib lines up over here. And when I'm trading the NASDAQ, I'm respecting every fib on every chart. NASDAQ is a different animal, guys. It's not like trading crude oil. It's not like trading the ES. It moves faster. It moves more. So I think recognizing it, maybe get to break even when the large chart has a clear path, creates a good opportunity for you. Nice trade, Zeba. Nice to have you back. All right, Gary. Termination, and look at that. Just that confirmation. I love that you took an after picture. You guys remember this? So Gary said, beware the gap theory. Don't take that short. And then when it came true, he said, man, thank goodness I didn't take that short. He's kind of confirming and validating that his read was spot on. Paul, nice to see you back. Termination, not really. Divergence, 50-50 with divergence, and you're going to wait for a better look. I like it. Nice to see you in here again too, Paul. And then Zeba, one more, taking, let's see. Everything says down. There you go. You took a pullback at the area and got paid. That's a little hard to read. Let me see if I can blow this up a little bit. You're in at 60.65. Okay, your targets were 58.25. So you get in at resistance and you got stopped out. Stopped out on one for a loss. What got you out of the second one? That's okay. So Ziba, you're good at entries, right? You're solid with entries. So let's talk about management. Every time you exit, was it? Because it went down. It was going against you at your entry too, wasn't it? Does that make sense? What did your large chart say? Your large chart said down. Your large chart said go, 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 go. Your small chart requires it to go against you a little bit. So you take your great exit and you got stopped out, and that's cool. Well, the second pullback, okay, you got stopped out up here, but then you let it come back down, right? And then you exited. Why didn't you get stopped out both contracts there? Why did one contract get out lower? I guess that's my question. Before the second stop hit, you closed it out? It's hard to read. I see an entry, and then I see an exit, right? So you get in, you get out. Did you take another entry? Or you just exited one? Okay, I see. And then you got stopped out on the second. I'm with you now. Yeah, it was a little tight. Cool. Great trade. No, that's okay. You managed it perfect. You got in, you made quick profits. When you make quick profits, your stop got hit. I love it. Sorry, it was a little difficult for me to read. So Ziba, let me share with you, because you haven't been in class lately. One of the things that you're going to see on the NASDAQ a lot, no, there's no fault at all. Let's not even talk about faults. There's none. It is what it is, right? It's just difficult to read. But we got there. Got to remember, Ziba, I'm old. It's hard to see sometimes. But let me show you something that I've noticed. And you're going to love this for your NASDAQ trading. Everything says down, right? Everything says go. Everything is yeehaw going down. One of the things that I notice on NASDAQ is when these small triggers are against the trade. See how they're coming up? And look how that great entry, look where it bounces. It bounces right off those small triggers that are up. Do you see it? And remember, NASDAQ's a different animal. Ziba, when my large chart looks amazing like this and there's nothing in the way, if I take the first one and it bounces off the small triggers, typically if I get a close below those small triggers, I'm back in the trade because of what the large chart says. But these small triggers are notorious for creating a bounce. Does that make sense? So go back and look at them. And I think what you'll find is you'll probably come to the same conclusion that I did. And I have a piece of paper on my desk because I'm trading NASDAQ too a little bit. And the piece of paper on my desk says never fight those small triggers. And I just don't, right? I just don't fight those small triggers because they tend to push. And guys, right now, NASDAQ is caught in between a couple areas. It's bouncing off resistance and support. It's creating challenges. It's not providing odds favorable momentum yet. It's just not time. We can identify through Fibonacci the areas that are likely to hold, likely to break, and wait and get those advantages. All right, Paul. Looking like it might go, but you don't want to sweat through all that. Best of the best only because you deserve it. I like that post. One divergence on a 50-50. And guys, I want you to see this. When we talk about those medium probability trades, If it reverses, it would be amazing. Or, Safia, what if it breaks through and gives you a clear path? What if it goes above 74 with odds favorable momentum? Or what if it goes below 3650 with odds favorable momentum? Right? Don't worry about whether or not it reverses. How about if it meets the rules, you take the trade, right? Isn't it easier that way? Now you don't have to wait for a reversal, you only have to wait for rules to be met. I think this is such a great picture. Paul, I don't know if you're even still listening. It might go, but look at that. 1, 2, 3 areas that aren't broken. Not coming from a termination condition. Divergence against the trade. Small's getting above the large, right? Paul's saying, I don't have to hope. I'm going to wait for the rules to be met. And if they're met, I'll capitalize. All right, Ziva, termination, odds favorable. You take the entry, and it looks like this one got you. And once again, there's those small triggers against it. Ziva, do you see it? I think we're on to something here. Small triggers down against it. Yeah. And you also have 2 divergences, and it's directly from a fib. So on NASDAQ, respecting these fibs a little bit, I put my synthetics on my large chart. You just wanted to ignore the second divergence, yeah. And your best entry was right here, Ziva. So you missed the best entry, and you took the more challenging entry, yeah. And look at your trigger lines, how split they are. But right here, the right one on top of the other. It's tough when you miss the best one, convincing yourself that you shouldn't chase the next one. Good stuff. Debbie, that was the one, break even, right? And then when everything rolls, maybe a second chance, but that's okay. I think that's an appropriate stop based on what's going on. And I don't know what this red line is. Is that a fib from a different area, or is that something that you're looking at? Because if it's a fib, then that's a termination condition, 100%, right? Textbook termination condition. I like that you got paid a little bit on this one, then outbreak even. Nice job. Isn't that great, though? $100 and no risk feels good. Good job. All right, Paul, got you again. Termination, full reversal, odds favorable, 50-50. Just waiting for it. Stalking it. Like a cheetah on the prowl. And then Mike, directly, short of the termination condition, right? Odds favorable from a term, everything says go. Price doesn't reach the area yet. And guys, we know that price has to reach the area for it to be a termination condition, right? That's the recipe. Price doesn't reach the area, pulls right back to support inside of favorable large triggers, quick profits, and then, oh, that was it. You took all 4 off. Probably could have held for the area. Mike, great trade. But from 56 to 64 is 832. That's a nice little $600 moment in life. Nice job, Mike. Great trading. And then Paul, smaller position due to the size of the entry window. Rockstar entry. Risk is virtually nothing. Profits are taken. Man, all that waiting paid off, didn't it? And then you exit, and then you get the deeper push with only 1 divergence to the bottom of the window, and you say, I'm taking this one. Very nice. And then Debbie, did you see John made a picture with divergence, small trigs down. The PSO with the fib is the best long spot. Well, that's true. Unless you factor in the termination condition, right? I see what you're saying there, John. Nice. And then still just hanging out on the NASDAQ, guys. Nothing to do yet. And then the S&P, nothing to do yet, right? We're in a holding pattern. And then crude oil, first one bounces that divergence print that pushes to the bottom of the window. Guys, look at that. That's support with every trigger line above it, right? And then Paul, you take it and you have to manage out. Low ticked you, jerk faces. It happens. Does happen. Nice to see you back in here though, Paul. And now this would be one of those instances where we're sitting on our hands and we're waiting, right? And maybe if everything rolls, we look for continuation, but now we're in a holding pattern, waiting for the best of the best, waiting for those advantages to come around. Good job, everybody. We made it through all your pictures. That's it. Maybe if everything rolls. If it looks perfect, awesome. We'll take a trade. If it doesn't look perfect, we can sit on our hands. Guys, there's a divergence. There's that higher divergence John Novak's been talking about for a week now, right? Termination with divergence and now a higher divergence. We're not trading into a downtrend. We're not trading into all this. 3 divergences off the low. Guys, there is an absolute fight coming on. There's not a long trade to be had yet. There's not a short trade to be had yet. There's just a moment of waiting, right? Hurry up and wait. That's it, guys. Sometimes that's all you can do is hurry up and wait. Hardest thing you'll ever do as a day trader is absolutely nothing when there's nothing to do. When there's no statistical advantage, it becomes a sitting on your hands moment. Now I want to talk about something, guys, because we've seen some great trades with not the best result. And this is an excerpt from Mark Douglas, who was huge on the psychology of trading. If you look at the videos that I posted in the room earlier, there are links to Mark Douglas videos. It'll do wonders to fix your head. I'll give you those links again right now. But understanding that you don't control the market, understanding that there's nothing but upticks and downticks, and we're looking for an opportunity to take advantage of patterns that have proven to give a statistical advantage. And when you stop expecting to win your trades, you're probably going to win more of them. Thank you, John. Start worrying about the execution, because the execution creates advantages, right? The execution is the execution of rules that have been proven to win more than they lose. The execution is momentum and a clear path in an entry area. And guys, that's one of the reasons that we study as much as we do. One of the reasons we can go back historically and look at things. One of the biggest reasons that we take this spreadsheet and we fill it with countless versions of rules-based entries so that it becomes easy, so that we build trust in the methodology and the rules. Guys, that was a 50-50 trade with divergence. If you're following the simple plan, it says don't trade, right? New users, until you can recognize an advantage, keep it simple. It keeps you out of a loser on this one. Small loser. And it doesn't mean that it's not going down, but this is one of those instances where you just have to be patient, right? Rules are designed to keep you safe. They're designed to create a statistical advantage. There's the S&P. Termination, nothing flinches. Everything comes down. Now we're trying to decide, is this area of resistance with all the trigger lines below it, is this an area that may hold? We don't have the advantage of momentum, but we have a tiny window of opportunity, right? Just going to wait and see. Wait for it to be perfect. Support held on crude oil, didn't it? That large chart said that this area is likely to hold because all the trigger lines are above it. So we weren't going short. 90% of what we do during the day, guys, is just reading indicators. 90% is waiting for the advantages to be present. 90% is sitting on our hands, waiting for the best of the best, because, like Paul put on his chart, because we're worth it, right? We're worth the success that our rules bring us. And we realize that we're not in control. I love sharing this picture. This is my favorite picture. Ron named him Norbert, which cracks me up because now he has a name. Sharks and remoras. For those of you that aren't familiar, remoras follow sharks around. And when the shark tears a tuna in half, the remora eats the scraps. When a shark eats a surfer, the remoras eat the scraps, right? Sharks are the big money investors. Sharks are the guys that move the market. Sharks are the guys that react to Fibonacci. Sharks are the guys that make our rules true, that give us the momentum, that give us the clear path, right? The guy who tried to be first, this is the guy that gives us that little pushback to the best of the best area. This guy gets eaten by the sharks. This is the guy that makes it possible for us to enter the trade. We can be remoras. You can be a remora, guys. Think of it visually. Visually, this guy creates momentum, right? Because he's got the money to do it. This guy isn't hitting Fibonacci. He's not reacting. We're going to take that little pullback, guys. We're going to take advantage of all his hard work, give ourselves a statistical advantage. Yeah, water's fine. Do the Fonzie, right? Go over him in a leather jacket. But trading is very much about waiting for the advantages. Jumping the shark. And just waiting for the best of the best. And it's a pain in the butt some days, guys. And some days it's like an ATM machine. Gary, you're missing fibs. And it looks like, no, maybe not. 50, 55, nope. Gary's got a little different look. 3 divergences on the low. Just waiting. Waiting for the best of the best. Look at that divergence, weak triggers. No reason to take a trade. It's a 50-50 with divergence, right? A little bit of overrun. 50-50 doesn't work. Divergence. 50-50 going the other way. Divergence, second divergence that pushes to the lower area. And now it's working its way up with that momentum. Some of you have plans for that, some of you don't. Weak triggers, loss of momentum. Kind of a holding spot. Still mad about the low tick, but don't do something stupid. I love it. I wish you could see the smile on my face right now. Revenge trading, guys. It's costly. It's costly. Gary, 50-50, you had one divergence. You take the entry. Works out nicely. You get out at the trouble spots. No reason to lose money. And then it shuffles a little bit, right? And then it goes down to that weaker point. Notice how it gives you, excuse me, one second. Sorry, the desert presents a new set of allergies, right? Odds favorable momentum hides mistakes, right? Odds favorable momentum. It's hard to stop a freight train, guys. It takes some time. There's usually another push. And you can take advantage of that push if you can read your charts. That 50-50 didn't work. Divergence kind of confirmed that it wasn't working. And guys, we're still 50-50. We've had multiple divergences. It's kind of an ugly look, right? The synthetics are up, the large are down. It's Monday. The smalls are down. We know on the NASDAQ they love to bounce off those smalls, right? They did it here. Price gets to the other side. Now it's pushing back. We'll see what happens. All right, guys, I'm going to take 5 minutes. Your job for the next 5 minutes is to think about what you want to talk about in the last hour. If you want to talk about momentum, we'll talk about momentum. If you want to talk about clear paths, we'll talk about clear paths. If you want to look for entries, guys, we'll look for entries together. We'll have some fun with it. Take some pictures. Show me. But give me a couple questions. I'll be back in just a few. All right, guys, I'm back. You ready? Let's do it. This is NASDAQ. This is what just happened, right? So I'm going to put a checklist on it. Is the market coming from a good top or bottom? Guys, we get that full reversal off of fibs. I like it. Odds favorable momentum. Have to put a no. If I'm a rules-based trader, guys, my search is over at this point. Termination conditions not true. Nope, I'm right here at 1-to-1s and none of my trigger lines have broken through. Once again, if I'm a rules-based trader, guys, there's no opportunity for me here. Area inside of favorable large triggers? Well, there sure was. There absolutely was an area of support inside of favorable large triggers. But guys, it's imperative that you understand. If these rules aren't met, the small chart means nothing, right? So if you took this trade, you probably got stopped out. You took a loser, but your rules weren't met. Your rules are designed to keep you safe. Gary, I am 5 days back, I believe. Nope, those are 10 days back on this one. Mine is the original template. Crude, 50-50, not a termination, it's a target, right? All right, Gary, let's talk about your chart here. Which one's the termination, guys? Help me out here. The blue fib? Here, let me take a picture. This is a termination condition right here. That's when you're looking at, Ziba? Or right here, 73.67. This one right here is the termination condition. All right. I'm glad that you said that. So let's talk about it, guys. No, you're good. So let's go through the recipe for a termination condition. What has to happen first? Guys, remember how it's a two-part process, right? Price has to reach the area. If price doesn't reach the area, it's not a termination condition. Because what's a termination condition mean? It means that you don't have a clear path. It means that there's not room to the target. It means that you've reached a point that may create a bounce. So Ziba, in order for this to be a termination condition, the price bars have to reach it. This is a target. If I get into a short trade, that's a target. This blue, the cyan line, hasn't been reached yet. If I get into a short trade, that's a target. If I get a no divergence pullback to an area inside of favorable large triggers, oh my gosh, did price reach it? Remember, that's the first thing that has to happen always. Did price reach the cyan line? Not yet, right? Nope. So it's not a termination condition. It's a target. So watch this. So let's go through and explain it. Yeah, but we'll do it for everybody too. And the reason I'm showing so much more of the 5-1 here is remember that we trade pullbacks, right? So from here to the area of entry is from here to the area, and that entry area is right there around 67 if we take a 50-50, which means that I have all of this space down to that cyan line. And that's one of the reasons that we let price reach the area before we decide that it's a termination condition. And so much so that I went to my termination condition section and I took a picture. That's the wrong one, sorry. And we call this a termination or a target, right? Because this is pretty common for new people. If price reaches the area and the trigger lines don't break, textbook termination, right? But if it's off in the distance, if it's on the horizon, that's going to be a target. That's how I go through it in my head. If those price bars haven't touched it yet, that's where I'm trying to get. Does that make sense, everybody? So on Gary's picture, we have a 50-50 trade. Whoops, where did it go? Gary's picture, we have a 50-50 trade. No, that's not his picture. I'm going to get there. We have a 50-50 trade, and if the trade is entered, the cyan line becomes the first target. Terminations for the win once again, guys. Happens a lot. Weak triggers, there's a higher divergence. The S&P is trying to work itself out. And then Ziba, 50-50 trade. I love this. 50-50 trade. If you entered, if you took the 50-50 trade, then that cyan line was a target. Actually, it looks like it's bouncing off of the cyan line, so the target was reached. It's a termination condition because price reached it. If it pulled back on this bar, then that would have been a target. But you can see that it went right to that line, to the tick. So this would be a short into a termination condition. It is. You reached the line. The trigger lines didn't break, therefore, no short trades, right? If you did take this trade, you got to be prepared to manage. So it made the target before it gave an entry. And look how price is reacting to that key area. Rules are designed to keep you safe. If you're brand new in here, and let me just ask, all my new guys are pretty quiet today. Tam, how are we doing? G, how are we doing? Dano, how you feeling day one? M, feeling good about it? Guys, I want you to remember that even if you're on, hey Tam, guys, if you're on a demo, I want you asking every question. I want you posting as many pictures as you can. If you are 6 months into it and you're still working on it, I want you to post questions all the time. After the higher divergence on the 5-1, we should expect a pullback. I think for me, because I have a termination condition on the large chart, nothing matters to me. Nothing matters to me on the 5-1. Because I'm not trading into that area. Does that make sense? But yeah, higher divergence suggests that it may push higher. I don't know if it's going to reverse or if it's going to push up to one of these fibs. And this is where it gets troublesome, right? We hit the termination condition, and if you're still thinking I want a short trade, where's it going to go from? Is it going to go from this fib? Is it going to go from these 1-to-1s? Is it going to go from this fib up here? Look at how big that area is. There's no reason to guess, right? Because you know that we've reached a termination condition, that you've taken away the advantage of a clear path. And look how the market reacts to it. He mentioned this on the long and the lower, could be a pullback. So what you get, for a long, still too soon. Ziba, I see what you're saying. What's John saying in that one, and this is still too soon. You're still in determination conditions everywhere. What John is saying, and let me see if I can find a look that kind of goes with it. What happened at 1025 here? So when this mid-band holds, termination condition, and then these triggers roll, and you get a pullback to strong triggers, right? These higher divergences kind of set the tone for it off of that termination condition. So what we're seeing right now is that termination condition, and then we get the higher divergence, and it kind of sets the tone for potentially looking for longs. It gives you that first look, right? That little bit of confirmation that things are changing. And then, yeah, Mike or M, too soon here, right? It is a termination, but everything still says down. And that's what it is. Divergence on, thank you, John. Divergence on the small chart validates the termination on the larger chart faster than you will see it on the larger chart alone. So M, what you're seeing here is just a little too soon, right? Or an exit condition if you decided to take the short. And now everything is rolling. And if this termination condition is really going to reverse the market, these trigger lines are going to roll, right? This area is going to clear. Thank you, John. That's the buddy system. When I can't come up with the right phrase, John swoops in and helps out. But that's a good example where the small chart can help confirm what's happening on the large chart, the information that the large chart is giving you. Pivot stop out. You see it? Price reaches that divergence low. Absolutely no trigger lines break through. Another termination. And now we're starting to get that move, right? That push off. One divergence. The smalls are starting to break above the large. Everything's rolling, and this termination condition is doing exactly what we expect it to do. Fulfilling expectations. But right back into that key area. Everything says down. The triggers were weak. 1, 2, 3 divergences. There's a higher divergence. Not looking to go short. A little too soon to take longs. 90%, guys. 90% of what we do during the day is going to be sitting on our hands waiting for advantages. But now, Ziba, what we can say is this termination condition has already given us stronger triggers, right? So we're looking for 87 to break. And if 87 breaks, we're starting to get that information that we can look at to take those advantages to go in the direction of the trade. Rinse and repeat, guys, over and over. TAM, is it starting to sink in a little bit? Takes a minute on the first day, second day, third day. Remember, guys, keep it as easy as you possibly can. Everything is a foundation. We're growing from the most basic platform and then spreading our wings as it happens. The first thing we do is we just determine trend. Guys, you're going to be able to look at your large chart and understand whether the market is going up or down, and then commit to trading with that direction. And then you're going to learn how to recognize strong trigger lines, the advantage of momentum. And when you have strong trigger lines and you've established the trend, well, now you have those advantages in place to begin to look for a clear path to determine whether or not the market's likely to continue because there's nothing in the way. And then when you get good at these termination conditions, and this one will take a little longer than triggers, right, than strong triggers. And strong triggers might take 3 to 4 seconds longer than identifying the trend. And ultimately, you're going to bring it all together to those entries inside of favorable large triggers. And you just have to practice this over and over, right? Take a trade, read the rules, put it in the room, annotate a chart. Termination, determination. So now we go into that if-then. If my small triggers get above the area, now I'm 50-50. If divergence doesn't print and I get a pullback to an area inside of favorable large triggers, perhaps I'll take that 50-50. You're going to ask the 50-50? Smalls are through, large are not, right? It has the potential to break, but it's not a clear path. What if it passes the divergence line? So what areas aren't broken yet? I think this is the question that you're asking. Let's look at it. This fib isn't broken yet. This divergence line isn't broken yet. And these 1-to-1s are right on the brink of being broken, right? So your entire area that you want this momentum to break is that big. As these large triggers continue up, you have less areas that need to break, right? All the more reason to let it be perfect, because if you pull back to 56, we're still trying to break a divergence high. We're still trying to break that area above. Does that make sense, Safia? You guys, when I put together the KISS trading plan for you guys, the one thing that I put on that 50-50 trade initially is one area not broken, right? There's a point where if I've got 4 fibs that haven't been cleared, that's a lot of work for the market to do. They may not be reacting to the first fib. It may be the one right behind it that they're reacting to. There's the S&P, multiple divergences, trigger rolls. Now we have a reversal, but we're still trying to figure out if it's going to make it up. Uh-oh. There we go. And then crude oil is trying like the dickens to get through 87, but none of the trigger lines are broken yet. Large triggers still haven't rolled. So this termination condition isn't a strong bottom yet because it hasn't created a full reversal. So we're in a holding pattern. And I can tell you guys that you'll go from feeling frustrated about being in a holding pattern to being thankful that you understand your rules well enough to keep you in that holding pattern. On the 5-day chart, what's a 5-day chart? $70, $90. So you're using day charts too, Gary? Oh, 5 days back. I'm like, you're using daily charts? Here, let me get to my NASDAQ. I'll put mine on 5 days. It doesn't matter to me, guys. I respect my fibs, no matter how many days back I am, and you have to trade your own charts. But there we go. Let me put mine 5 days back. Let's see what it looks like. I'm with you. I was thinking you're using a daily chart. So I'm kind of 50-50 on the 5 days back, right? It's still a termination. It still creates a full reversal. It still gives me odds favorable momentum, but I still have a divergence on an area that hasn't broken. And Gary, ours look different, even 5 days back. I probably need to reset and repair my database if I'm going to do that. Look at how the market scrambled here, and none of your rules were met. So you didn't have to get caught in that, right? Market's caught between areas, your rules aren't really met. You might have caught along here, and you might have caught along here just to get up to that fib. Let's see. Termination, full reversal, odds favorable, there's a tail, right? This goes back into, is it a termination condition or is it a target? And guys, this is a great lesson. It's going to open doors for you. Price has not reached the area. Odds favorable from a termination means we have a clear path. Look at that entry spot, guys. Mike, I think this is the one that you took. Picture perfect, right? And it goes directly to Fibonacci resistance and no trigger lines break. So Mike, do you see how maybe you could have gotten a little extra out of that one? You didn't need to. Yeah, and the termination before. Guys, that's the perfect storm right there. New users, this is what we're studying every day. That's your trade. Take a picture of it, right? Take that picture. Take that same checklist that I gave you and drop it on there. And if you need to, point it out. There's your termination condition that creates a full reversal. There's your odds favorable momentum. There's your clear path. And there's your entry inside of favorable large triggers. And guys, this is your highest probability trend trade ever. Save it to screencast, right? Copy it, drop it in the room. Let's talk about it. Put it into your spreadsheet under the perfect look, guys. If you're patient and you wait for the best of the best, life is going to be easy for you. Bad bottom, 50-50. Big gap, right? Gap theory, 50-50. Is that the S&P? It's a good read, Paul. $50-50, multiple divergences. Don't care for that one. 50-50. And Paul, remember that while it's not the best bottom, you have 1, 2, 3, 4 divergences and a higher divergence, and that creates a little bit of advantage, right? Strong triggers, strong triggers, strong triggers. Watching that gap, and that gap's right here at 32, right at the bottom of your window. Just chart reading. It does. Did that on purpose. John Novak set that up because, Paul, the rules are the same, right? It's not 13-2-5-1. It's large chart, small chart. Large chart, small chart, guys. That's what it is. And the NASDAQ has its own personality a little bit, and it's fast, and it moves a lot. So a 34.5 and a 13.2 behaves the exact same way. And when you have those two working together, you can make it look exactly like what we typically teach on in the room. But there's little nuances. I think John has his set in at 24 stop loss. That's $120. It's the same thing as 12 ticks. And then looking for little bigger moves. There's workspaces, and I want to say that there are, there it is. Thank you. There's the settings for it. It is the same. John, would you post a picture of your ATM strategy? Would you be willing to do that? It's a good starting point. It's enough room to put your stop where the market shouldn't go, right? It's enough room to get you outside of that window of opportunity. Because the NASDAQ only moves in 4 ticks per point, it looks like more points, but it's only $5 per tick. There we go. Thank you, John. And Paul, there's little nuances on the NASDAQ. I like it. What I found is when I first tried to trade NASDAQ, I tried to take every trade over and over. It moved so fast that I felt like I should always be in a trade. And I abandoned my rules because I was trying to stay busy. And then I went back to just follow your rules, dummy. And it worked. 50-50 trade with 3 divergences. Guys, what do you suppose is a reasonable expectation? Yep, Mike, without a doubt. Look how it bounces off of the small triggers. Mike, have you noticed that phenomenon too? I know I've talked to Safia and now Ziba about it. When the small triggers are strong against a trade, it typically bounces off of them. So if you were looking for a long, that simple practice of waiting to get to the correct side it keeps you from the multiple trade scenario. And I found that that was one of my biggest challenges with the NASDAQ is I would take what looked like the perfect trade, it would hit the small triggers and stop me out. And then once it got to the right side of it, then it kind of worked out. But there's 3 divergences in the same location. And it's on a 50-50. And none of you guys got stopped out on this one because your rules said don't do it. Isn't that cool? Good Monday. Lots of movement today, guys. Lots of great lessons. Lessons don't always have to come in the form of victories, right? Sometimes lessons just come in the form of understanding the challenges that may present themselves, understanding when the advantages aren't in place. And I'm going to throw this reminder in the room. And those of you that have been here for a while, you know what? Feel free to back me on this one for people. Hey, Priska George, welcome to the room. Guys, to minimize your learning curve, and I'm talking to you guys that are brand new, post pictures of your trades in class. Every trade, win, lose, or draw. I want to see them all. I'm going to find something good to say about every trade, I promise. Man, if I was any better, there'd have to be 2 of me. I'm doing amazing today. If you win and the rules are wrong, guys, it may be a short-term victory, but a long-term failure. And how are you going to know the difference if you're brand new? You're letting yourself be brand new, guys. That's where you need me. I'm going to give you feedback on everything. We're going to talk about everything. If you're on a simulator, if you participate in class, there's no risk of loss of your capital, guys. You can't go broke on simulator. You can't. All you can do is get rich with knowledge. You need someone to tell you what you did right or wrong. You need someone to help navigate these waters as you're brand new to them so that you can get comfortable, so you can get consistent, so that you can develop trust. And that really is part of the educational magic that Nexgen offers. And I don't know why that sounds like such a cheesy phrase, but it's so true. This education class, guys, and not because I teach it, but because of the way that John Novak set it up, to have this real-time feedback, to have this real-time opportunity to verify, to validate, right? To make sure that what you're doing is consistent with what you should be doing, guys. It's priceless. It really is. Safia, I'm going to get mad at you. You ready? I've been waiting for an opportunity to make you cry, and I think I just got it. Safia. Tell me why this one probably didn't work. What do you suppose it was? Safia knows. It worked on target 1. Safia, you're trading in determination conditions, right? You got target 1. Why on earth did you take a second trade? With 2 divergences directly into a termination condition, small's inside of the large, what made you feel like that was the right trade? Do you want to know what it was, Safia? I think this is where you get mad at me. Are you ready? I'll tell you why you took that next entry. Because you keep getting lucky. Because you get lucky just enough with these dangerous, low probability trades and determination conditions that your brain doesn't remember all the times you get your ass kicked. It remembers, hey, remember when we made $100 into a termination condition? Let's keep doing it, right? So this is the 3rd time today that we've seen it. But if you go back, and it's okay because this is normal, and Safia, you and I are like sharing a brain, true story. If you go back and you start looking at termination conditions and just how often they stop and reverse the market, right? What you're going to find is that more often than not, and the joke is 60% of the time termination conditions work every time, right? It's great that she posts these. I feel like Safia and I have enough of a relationship. We can talk about what we see, what we do right, what we do wrong. I spend way more time praising her than I do beating her up, but I recognize patterns in people. So Safia, your challenge, and I talked to someone else about this once, is you get lucky just enough to believe that it's skill. Does that make sense? Guys, I've done it. I've been lucky just enough to believe it's skill, and then what happens is you run out of that luck. And 60% of the time, guys, it's unbelievable. But more often than not, those termination conditions just ruin things. And if you never traded into a fib that had the potential to hold, how many losers, how many headaches? Oh, Safia, you're just good at reading charts. And when you get good at reading charts, you have to kind of dissect what's an advantage and what's a read, right? That's okay. Let's go skydiving. What do you say? Let's go skydiving, but let's land in the ocean and then swim with sharks. Let's get some adrenaline out before we get back into the market. You're afraid of heights? Well, that's what the parachute's for. I get vertigo from heights. I hate it too. Mike said. I also have an irrational fear that sharks are going to eat me, but I want to go swimming with them. So do the diving. But guys, the key is that short-term successes sometimes equate to long-term failures. The unfinished, there's that bad bottom, comes all the way up, divergence prints, you know not to take it, and it's heading the other direction, right? Nice. High altitude, low open into the ocean. Did you have to do that in the Navy, Gary? Oh, absolutely, Safia. Guys, I get to the point where I feel like I know you guys. This is like hanging out, working with my friends. So what do we have here? Zeba? Yeah, I would say that's probably good enough, right? That's like a tick off of the gap. But you're also coming not from a good bottom, right? It's just kind of a pivot in space, and it reaches that midband and it reaches resistance. And the smalls break through, but the large don't follow. Gary, that's true. And then on that 50-50, do you see how you got that divergence, letting you know that it's a lower probability? So yeah, while it's not the gap to the tick, it's a great read to not go long there. Nice job. And you guys know that it is fun, right? It's so much fun for me to watch you grow with the software, to watch you get comfortable, to watch you get confident. Bad bottom. You made your goal and much more. Nice job, Safia. Keep that path. Bad bottom. 50-50 with divergence. Everything rolls. No divergence on the pullback. Do you know why, Zeba? Guys, have we talked about that? Why people lose their confidence when they go live? The trust isn't complete yet, right? Sometimes we go live too soon. Sometimes we get lucky on simulator and it causes us to go live. But once you get your rules down, once you develop that trust, it's amazing how you don't worry about losing anymore. And yeah, watch the Mark Douglas video that John posted. Man, those Mark Douglas videos are strong. And I think that, here we go. Here's the watch list for you. I'm going to put it in the room. Whoops. This is great homework. So good tops or bottoms, guys. Recognizing where areas are going to hold or break. The video lesson for the good tops or bottoms. The NASDAQ review on the good tops or bottoms of trend trades, guys. Everything revolves from good tops or bottoms. And then there's that good tops and bottoms and momentum. And then there is the Mark Douglas videos. Here, let me just put it in. And you may have to copy paste all those, but there's all your links right there. So you can scroll over and copy those, Zeba, and just throw them into a Word document or something. The sample trading plan, D. Let me just give you one right here. I don't know that it was removed. I'm not 100% sure, but here's the one that I present every day. And this one revolves around beginning with the high probability trend trade, focusing on the advantages, managing it very meticulously, and then adding that second trade, that 50-50 trade with conditions being met, and then managing it differently because it is a different trade. And if you have any questions about those, please feel free to let me know. And guys, that video list that I just put in there is gold. It is so much amazing information that'll absolutely change your perspective on a lot of things. It's a lot of clarity. John Novak is a fantastic teacher. And when you have that basic foundation in your brain and you start kind of latching on to what he says, his whole thing is finding patterns. And he's unbelievable at finding patterns and recognizing patterns. And he sees things that the average human don't see, which is why I don't try to trade like him. But he creates them into these lessons for you guys. Watch the videos, take some time, spend an afternoon, pour a glass of wine if you need to, whatever. But keep eyes on it. Well, he trades like he's been doing it for 27 years, right, Zeba? 27 years he's been watching markets. 25 years he's been creating algorithms. And most people do. And guys, that's why we have this foundational training, and that's why I love my brother. He's one of my favorite people in the world, but I have to kick him out of this classroom sometimes. Because if you guys try to trade like John Novak trades, you're in, it's a recipe for trouble. It really is. He did. Safia, he and Mark Douglas did speak extensively during his time. And Mark Douglas was a great mentor on the psychology. And it was funny, before I knew who Mark Douglas was, before he ever introduced me to those videos, John had a lot of phrases that I didn't understand. And then when I watched the Mark Douglas videos and I read the Successful Traders, I was like, oh, John's using his language. John's using the exact same language that this guru was teaching. And it made sense. When John used to tell me he doesn't care if a trade wins or loses, I thought he was crazy. And after I watched Mark Douglas, I was like, well, that makes sense. Yeah, and it's true, right? And you get to that point where you don't care if it wins or loses because you know that everything you do has a statistical advantage, which is why you've got to embrace the process rather than the results. It all goes back to that, doesn't it? Guys, great class today. New users, thank you for being here. Demos, thank you for being here. If you are on demo, I want you to start using your voice, guys. I want you to start talking in this room and asking questions. Show me pictures. Thanks, Safia. Thank you for all your posts. Guys, my email works. My Skype works. I'm going to tell you right now, if you try to reach me via Skype, your initial message has to tell me that, hey, I'm a Nexgen user and I'm trying to reach out. I had like 17 requests over the weekend, and I think most of them were adult websites just spamming. But I don't ever want to miss out. So if you send me a Skype thing, thank you, Debbie. If you send me something on Skype, guys, make sure that you let me know that it's you on Skype. But that's it. I'm going to be back tomorrow morning at 9 a.m. We're going to do it again. And then we're going to do it again on Wednesday and Thursday and Friday. And my commitment to you guys is that we're going to work together for as long as it takes to get you where you need to be. So keep asking those great questions. Post pictures. Show me what you're doing. And we will continue the path. Guys, take care. Everybody enjoy your afternoon. Go do something that's fun for you. And then do a little study. I'll see you guys in the morning. Be good, everybody.